In this video, we're going to walk through corridor amortization of accumulated other comprehensive income gains and losses. The Larkspur Corporation has the following beginning of the year present values for its projected benefit obligation and market-related values for its pension plan assets. And again, these are beginning year values. We do our corridor calculation based on beginning year values. We also have the following reported other comprehensive income gains and losses for the year. These aren't accumulated amounts, but these are annual amounts for the years 2019 through 2022. And we have the average remaining service life of the employees. Let's go ahead and calculate our corridor limits. Our corridor limits are calculated as 10% of our pension benefit obligation at the beginning of the year and 10% of our pension plan asset values at the beginning of the year. So 10% of the 2019 pension benefit obligation is $222,000. For 2020, 10% of the $2,664,000 is $266,400. The calculation for 2021 is $327,450 and $399,600. Next, we're going to calculate 10% of the pension plan asset values at the beginning of the year. It's $210,900 for 2019, $277,500, $288,600 for 2021, and finally $333,000 for 2022. Then we're going to select the larger of these two values. For 2019, that's the pension benefit obligation of $222,000. Then it's the $277,500 for 2020. It's the $327,000 and finally the $399,000. Next, we're going to do our calculation of the current year's amortization. The amortization is based on our beginning other comprehensive income balance. At the beginning of 2019, we were told that the balance was zero. Our OCI limit for the year was the $222,000. Obviously, the OCI balance is less than the OCI limit, so there is no excess in 2019, and of course we have no amortization expense. Our amortization table, our balance and our accumulated OCI, then we take the beginning balance for 2019. We were told in the current year we had a $310,800 loss. There was no amortization in the first year, and so the ending accumulated balance in other comprehensive income is $310,800. This then becomes the beginning balance for 2020. Our OCI limit that we calculated above is the $277,500. The excess then is the difference between these two values, which is $33,300 in accumulated loss. We're told that we have 10 remaining service years, so we will amortize that over 10 years, and our amortization expense is $3,330. Our beginning of the year balance in our accumulated other comprehensive income was $310,800. Our current loss is $99,900. Our current year amortization is $303,330. So our ending balance is the $310 plus the $99 minus the current year's amortization. So the ending balance is $407,370. That becomes the beginning balance for 2021. Our OCI limit was $327,450. So the excess is $79,920. The remaining service life of employees employed in 2021 is 12 years. So we'll amortize that over 12 years. So we take the $79,920, divide it by 12, and our current year amortization expense will be $6,660. We now have to calculate the end of year OCI balance. So we take the beginning balance, which was $407,370. We add to it the current year loss of $12,210. We deduct the current year amortization of $6,660, and we get an ending year balance of $412,920. Again, that was the beginning year balance increased by the current year loss minus current year's amortization expense. The $412,920 then becomes the beginning balance for 2022. Our OCI limit for 2022 was $399,600. So the excess is $13,320. We will amortize that over 12 years. So our current year amortization will be $1,110. Let's go ahead and calculate the end of year balance for our OCI. We had a beginning loss of $412. We will, of course, reduce that by the amount of the current year's gain, as well as reducing it by the amount of the current year amortization expense. So we'll take the $412,920, subtract $27,750 and $1,110, and get an ending balance of $384,060.